Is silver about to crash? So is silver about to crash? Well, before we answer that, let's just cut to a clip with Todd Bubba Horwitz, who discussed the recent price movements in the precious metals. Now remember that Bubba is a swing trader.
Okay, let's link it back to your gold now. So your thesis is higher inflation and potentially a slowdown in the global economy, which is already happening, by the way. So I guess that means stagflation, but gold doesn't seem to be reflecting that, at least not recently. We've had 2 drops in a row, significant drops, 1% on Friday, another 1.5% today. It's certainly not acting as a safe haven against all these equity markets declines. So why is gold not behaving as you would expect it to hedge against higher inflation, hedge against equity volatility, and so forth?
Well, first of all, gold is never a hedge against equities. Okay, that's a misnomer. Gold is a hard asset. It's a hard asset commodity that is under some pressure in here. But remember where it just came from. It was under 1,800, and we're still up almost 1,900, and we're at almost 2,000. I think today and the last couple of days, because of the dramatic selling in equities, you're seeing basically just sell everything, get me out of everything, or I'm selling gold to finance some other positions that I have on. I think that gold will find a bottom and find a base, and it will do what it always does. You know, in 1999, gold was $200 an ounce. I mean, now it's 2,000 basically. So again, it will rise in time. We cannot look at markets from second to second based on what they're benchmarked against or what's going to drive them. Right now, you've got a little bit of a panic going on, and they're selling everywhere.
Right. Do you think the announcement by Jerome Powell last week about the quickening of Fed rate hikes has anything to do with gold's drop over the last 2 days?
I don't think so. I don't put a lot of stake into that news. I got to say to you, David, that I believe, in my opinion, all of that news has been priced in all along. Anyways, everybody knew they were going to have to raise rates fast. So I don't think this has really caught the markets by surprise. I think that people look for a reason for why the markets are going down. The reason markets are going down is because they're in trouble, because they've been setting up for this down move for quite a while. Just look at the volume. Look at the volume in gold. It's very light in comparison to the amount of selling that you're seeing. Look at the volume in equities. It's getting heavier, but it has been the most ridiculous volume I've seen in 44 years as a trader, which was just telling me that they were allowing retail traders to buy before they whack them. And that's what I think we're starting to see.
You haven't seen what exactly in 44 years in your career?
I haven't seen this lack of volume in markets and this lack of participation in 44 years.
In the gold market?
In any market.
In any markets. What are people doing? They're on vacation, or what's going on?
No, again, you're seeing a lot of the institutions, funds, and commercials are letting the retailers step in, and they're cracking them, which is why I think we're seeing this meltdown. Again, I think that there's positioning and playing the markets the way they are and following the price action. And since we've subsequently made lower highs, okay, that just shows that we're certainly in a significant downtrend.
Okay.
And I'm sure you all know who Ronnie Stoffele is from Incrementum. He and his partners do the In Gold We Trust report each year, which is actually coming out soon. Ronnie tweeted, "I'm bearish, very bearish. Risk off, equities, currencies, commodities, cryptos, highly deflationary price action. Fed will be very slow to show support this time round." Matt says, "You were saying all-time high last Monday, Ronnie." And Ronnie replied and said, "I know, but I also said that the call was wrong. No worries, we'll see many all-time highs for gold in the future. The question is, at what point will the Fed be forced to pivot?" And that really is a question. I've been sharing on this channel for some time about being in the Luke Groman camp and others that are like, well, central banks have cornered themselves, and yeah, they might raise once or twice and then that's it. Things will break and they'll stop, and we'll see the so-called power pivot and rates starting to come back down again. But then there's other people like Jim Bianco and others who argue, Joseph Wang, former New York Fed trader, Bill Dudley, former New York Fed president. All these people are talking about, no, they're going to fight inflation this time. Others have talked about that the so-called Fed put is much, much lower than the market actually think. How much lower? How much lower? And that's really the big question. And Ronnie says here the Fed will be very slow to show support this time around, and that goes into the argument that the Fed put is much lower than where the market has pretty much expected it to be for the last 30 odd years. But we've also got a CPI problem, don't we? And then Ronnie really nails it down the bottom where he says the question is, at what point will the Fed be forced to pivot? Because if they don't, we're going to see a 1929, 1930s depression, and equities will crash 80%. So at some point, I do agree that the Fed will be forced, and central banks will be forced to pivot. And at that point, that the game is up for them, and the game is up for the monetary system and hard assets. This is where some people talk about hard assets like gold and silver will be unattainable. I think, is it Mike Maloney that says that? Unattainable, unaffordable, and unattainable. So that's where we're at right now. And I recently did this video, Don't Fight the Fed. And, I highly recommend you guys watch it if you haven't watched it yet. This just goes into all the different arguments that the Fed put is much, much lower, and that they're not going to do a power pivot on the first sign of the markets breaking. So I've been warning for some time now that we are going to see a market crash. In fact, I've been arguing for a long time that we're going to see a 1973-74 style situation happening where we're going to have high CPI, but in 73-74 the market fell 50% in nominal terms. Yet we had CPI at 12.5% during that period. So I'm not saying the numbers are exactly the same, but what I'm saying is, yes, asset prices can come down while CPI for the goods and services that we buy remains high, and I still believe that's going to be the case. Now, I know many of you in the comments on my videos, I put a video up which is bullish gold and silver or bullish commodities or something, and the day before or for 2 days, that particular commodity or silver or whatever goes down, all of a sudden, everyone just screams blue murder. And let me tell you guys, we are not swing traders. We are not swing traders. Bubba, he's a swing trader. So if you want to swing trade, if you want to know price movements on a daily basis and trade that, go follow a swing trader like Bubba. We are fundamental value investors using Austrian economics as our foundation for our analysis. As Warren Buffett says, if you buy a stock for $1 and it goes down to 50 cents, you better love it. Otherwise, you bought it for the wrong reasons. So we see the fundamentals of silver. Now, I've got a video coming out soon talking about the fundamentals of silver, because I think we're going to see silver in a super cycle, like a commodity super cycle, and I believe we're going to see silver experiencing the same thing because of the fundamentals. Now, I hear the argument, it's all rigged, it's all rigged. Yep, okay. Fundamentals always win in the long run, and that's the type of investor I am. So when I see silver being smashed down, I actually love it. And I did a video back on the 31st of January talking about silver to crash to $16 before booming to $40. Once again, just everyone in the comments just had a crack. Now, I don't think it's going to go down to $16, but if the stock market does sell off quite sharply in the next little while as rates start to rise, then yes, gold and silver is going to get sold off in the short term. And for me, that creates buying opportunities. Someone actually said the other day, they liken it to getting a latte, and you've got all the froth on top of the latte. And what's happening at the moment is that froth, that cream is just getting wiped off. It's just getting wiped off. And so, yeah, as Bubba said, we'll see a floor in the gold and silver price. But, I like this chart. So the final 2 years of 1970s gold mania, including big and sharp sell-offs. So you can see yeah, what's that? 30th of October to 30th of November in 78. There was a 20% sell-off in 23 days in the silver market. Now, you guys all know what happened to the silver price after that, don't you? Silver had a huge spike up. And I actually have done a video on this. So I did this video about a month ago, $125 to $714 silver in a repeat of the 1970s. And I think there's a lot of similarities between 1970s and now on a range of issues, from energy shortages, from CPI, to the way the equity markets, the precious metals markets are performing, and there's some similarities. Now, there's some differences as well that I acknowledge, and there's actually probably one could argue more similarities with the 1940s than now. But I talked about in this video that silver during that mid 1970s period did nothing. It went up and went down, and you can see, the movements. It would go up 20%, it would go down 10%, or 20%, go up 5%, down 10%, and so forth. And it did nothing. And I hear all the people screaming right now about silver, and they're missing the forest from the trees. We know where it's going. No, not even the swing traders. No traders know where it's going on a daily basis. They swing trade. Okay, and I've got some colleagues who swing trade and they do very well. I've got some colleagues who trade CFDs and they do very well. I don't do that. I don't touch it, because for every successful person I know that does that, I know another 9 people who lose everything and absolutely suck at it. So I stick to what I know and what I've had success with in the past, and I'm trying to share that on this channel, that these things can happen in the short term, but when you look at the long-term economics, the fundamentals, the supply and demand, and how that moves, then as Warren Buffett says, this actually gets me excited. And for those of you who say that all I ever do is silver bull videos, silver only goes up. Well, no, I did this video on the 31st of January. Silver crashed to $16 and boomed to $40. Now, I think that's a worst case scenario. So I don't see that happening. That's not my base case. But could I see silver down at $22 again in a market sell-off, in a sharp market sell-off? Absolutely. Could I see it hit $20? Absolutely. And for me, that's just a buying opportunity, because I know the fundamentals. I know where this is going. So, and that's what I am. I'm a fundamental value investor. I invest over the business cycle. Okay, I measure my assets against other assets, not fiat. These are all the things that I'm trying to share with you guys to help you guys. Now, maybe you're not an investor. Maybe you're not a fundamental value investor. Maybe you're a growth investor. Maybe you're not an investor at all. Maybe you're a speculator. Or maybe you're a trader. Because they're 3 very different things between being a speculator, a trader, and an investor. And you need to work out what you are and then apply that. Find whatever strategy that works for you and then apply that to financial markets. So, like I said, I think we're seeing a 73, 74 style period. That is my base case. Now, I'm not an absolutist. I don't concrete my feet into any position, and I'm quick to move. Like I said, I was in the Luke Gromen camp only a couple of months ago, that the central banks couldn't raise. They're trapped, and they'll raise once or twice and then stop and probably pivot. Now, I don't think that anymore. I'm on the other side of the camp where I'm like, no. They're gonna really try to fight this thing thing called inflation, or CPI. They're 2 different things, mind you. But for me, I'm still bullish gold and silver, even in market sell-offs. Now, we go back to March in 2020, and when the S&P fell 34%. Well, it says here gold fell 5%, but from my memory, gold fell about 10%, closer to 10%, 11%. and silver was about 32%. So that's about right. But I thought gold sold off a little bit more than that, to be fair. But, and here's the but, if you had gold, your purchasing power increased against the S&P 500. And this is how we measure things. We measure things versus other assets. Silver, I backed the truck up. When silver fell, I'm pretty sure silver fell slightly below 12. It was like 11.90 whatever at its bottom. And we were backing the truck up, loading up on that at that time. So yeah, anyway guys, look, I'm not a swing trader. I don't trade that. I trade options, sure, but I trade options using fundamental value analysis. So, you know, I sell put options to get into positions on undervalued stocks that I want to own. So if the stock falls below my, strike price, too bad. I was going to buy the damn thing anyway. And you know what? I get paid to do it. I get a discount. I buy it wholesale if you want to look at it that way. I buy put options. I buy bear call spreads in down markets. I buy leap options on certain situations. But I predominantly sell put options and I sell call options, covered calls, and I sell naked puts. They're my two bread and butter trades, and that's how I trade. I don't trade CFDs. I don't swing trade. I'm not a short-term trader. That's not what I do. We are fundamental value investors that use Austrian economics as our foundation, and we are sound money advocates. Now, sometimes that may come across from a biased point of view, but we live in reality, and we know that we live in a fiat monetary system. And so, what we want to see may not be what actually is. So that's who we are. And if you like that analysis and education, then thank you for being part of this community on Finance Uncut. But if you're a trader, if you look at the daily price and you get upset that silver's down 2 or 3% on a particular day, then go follow Bubba or find another swing trader or something. That's not what we do on this channel. Anyway, guys, if you like this video, please hit that like button. Really do appreciate it. Love to see your thoughts and opinions in the comments below. If you like what we do on this channel, subscribe, hit that notification bell. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.